Hey everyone, and welcome to another edition of the Buddy Study Group. And we have a carrier session for you today, and we are joined by Anita Svoboda from Thrivent, and she is here to give us the scoop on what's new with Thrivent, what's going on that should be on your radar, and of course, product overview of their traditional long-term care offering, which is, in my opinion, a product that is very well worth paying attention to and having on your radar, very competitive in a number of situations. So without further ado, I will let Anita take it from here. Whenever you are ready, you can kick it off. Thank you for joining us today.
Thank you so much. Hello, everybody. Thank you for spending at least 45 minutes to hear about Thrivent long-term care. The reason why I'm on this today is Jason and I ran into each other at the LTC PG conference last week, last minute as we were leaving the Yankees and the Oriole game. And I had stopped, there was maybe five of them together, and I had stopped and I just said, so do you guys work with Thrivent? Do you know who Thrivent is? I'm Anita. I'm an internal wholesaler from Thrivent. This is my first conference with LTCPG. I just did my spiel, and it was perfect because he goes, Anita, we'll connect. It's Monday. Here I am. We're on Tuesday, so here we are. So thank you very much, Jason.
Of
This
course.
is just really exciting. I've been an internal wholesaler. Actually, my base came from Newman Long-Term Care. And then Thrivent purchased Newman Long-Term Care about 10 years ago. And so we're a subsidiary of Thrivent, but we still really follow the rules on the Newman side as well as Thrivent. But all the long-term care business is processed through Newman Long-Term Care. And I'll just put that out there because you will see our case managers have a tag on the bottom of their emails that say Newman Long-Term Care. And if you're not aware of it, or if I even mention it, it's kind of like, this is weird, right? So Newman Long-Term Care hosts and licenses and contracts any private producer in the country. And it flows through Newman, and it's underwritten at our home office at Thrivent. So that's a spiel on the Newman part of it. But I've been doing this for about 18 years, and I absolutely love it. So I'm going to get right into our product. The differences that with Thrivent product, I am very well diversed in the LTC marketplace as well, which is kind of an added plus for my advisors that I talk to every day, is I understand the Thrivent obviously inside and out, but our friends, our competitors in the marketplace, Mutual Mahan GL, and then our 5 hybrid products. So I can be dangerous on phone conversations in many ways, whether it's underwriting, I get calls on a whole bunch of things, even if some of the business is directed through Thrivent. I'm only doing Thrivent only accounts like this one and many others, LTCPG. We can always have really good just LTC conversations and where certain products fit, and I can tidbit information. I don't talk about it, I don't solicit it, I don't sell it. I'm just knowledgeable. So enough on that. Let's talk about Thrivent today. We know here that, oh, I got to share my screen, don't I?
Good catch. Yep.
Good catch. My goodness. Okay. Can we all see that?
I think you're gonna need
Now
to.
I can.
There you go.
Okay. So, so with Thrivent, we are a not-for-profit organization. We're one of the nation's largest fraternal insurers. We have a common bond, and what that is Christianity. We're member owned as well. Our common bond is Christianity, which means there's one question on the application because of the bylaws in our product and our business, is that we have to state and ask our insureds, are you or someone in your household seeking the Christian faith? It is brought up once and never again, and it's yes or no. You can be married to a Christian and maybe your spouse is not. They can apply together. That's really, really simple terms there. It might be a little clunky for you guys out in the marketplace to maybe get used to bringing that up, but it's really kind of a not a smart thing, but a common thing to use that we have, other carriers available, like, Mutual Mohan, National Guardian Life, if they're uncomfortable with moving forward. As you see here, Thrivent is highly rated by several rating agencies. We are a Fortune 500 company serving 2.4 million clients. We also are recognized as one of the most ethical companies in the country, as well as one of the best insurance companies in America. Thrivent members give back. That's the unique, and I'm giving you kind of the differences in any other carrier in the marketplace, right? So Thrivent's members give back. As of 2024, $331.4 million have been raised and donated by Thrivent and our clients. Over 2.7 million clients have volunteered the community, providing 14.9 million volunteer hours. So let's talk about when we started here, right? When did we started as an organization back in like 1902, right? Thrivent is new to LTC, yes or no? Not really, but yes and no, because throughout the years we were on a journey of LTC. Thrivent began as two separate fraternals, and they were Aid Association of Lutherans, AAL, or Lutheran Brotherhood. AAL was formed in 1902. Lutheran Brotherhood began in 1917. So what I mean by this, they worked together, they built their roots, so together for over 100 years. Both began selling LTC in 1987, as you see on the graph here. In 2001, those companies merged in 2001 and formed Thrivent Financial. Okay, that's where Thrivent Financial got into the business, right? They formed and made Thrivent Financial. We launched our product. So between 2001 and 2012, believe it or not, our career advisors were selling John Hancock and Genworth. Okay. So in 2012, during that time, we were developing our own LTC Thrivent product. So we launched the product in 2012. 2 years later, we repriced it. Okay. In 2016, which is the series we are selling today, no changes, we launched the 2016 product. So there's a lot of history there. And the history, and I'll just touch base really briefly on our claims experience, because we have a lot of claims experience now coming into the books from all the previous business back in the old Lutheran Brotherhood and AAL days. So product overview, I'm going to dive right into this so I have time, you guys. We have a really neat piece. It's a marketing piece, and it's the written strategy piece. And this is a good marketing piece. A lot of our advisors, financial advisors, a lot of our newer advisors in the industry, I have sent this out. This has been a really popular marketing piece. It's either driven by for the client to fill out, you guys sit in your initial meeting and fill out, but what it does is the questions in this ask perfect questions, right? So what is the client's concerns? Family history. Tell me about your family history. Where's your care preferences? Potential funding and sources for plan. There's so many ways we can fund LTC products today. So it's a 2-pager. And I can definitely at the end of this meeting shoot out, Jason, so you know, if I get a list of who's on here, I can send some marketing pieces as requested, right? As a whole
Okay.
feud, you could distribute them however you want to do that.
Yeah, if you even want to just send them my way, I can send them to the study group list. So even those who are watching the recording and not seeing us live will be able to access those materials.
Okay, perfect. So I'll just plan on doing that at the end. So
Cool.
wonderful. All right, so let's dive right in here. Thrivent LTC covers any care, regardless of where it is, at 100% monthly benefit, right? So it covers home health care, residential facilities, nursing home, adult daycare, and hospice. Home health care is a big one. The only product we do not have the Thrivent product in is the state of New York. So I wanted to reference that. All other 49 states are much available. All right, Thriving at a glance. This is awesome. Issue ages are 18 to 79. Many other carriers, we both know, we all know that the averages is, usually 40 to 75. We have a 5-year rate guarantee built into our product. The only state we do not have that rate guarantee is in the state of Florida. Otherwise, we have the 5-year rate guarantee built in. Our elimination period is fabulous. It works like this. Elimination period is 1 day of service equals 7 days credited to your elimination period. 1 day of service. All right, so you go, I always say Sunday through Saturday, 1 day in that 7th calendar day will get equal 7 days towards the elimination period. I would say most frequent elimination period we all know is 90 days. Okay. We offer up to 8 years of benefit with a monthly benefit maximum of $15,000 per month. We have a unique, flexible increased benefit that offers a 5% inflation, and we'll talk about that inflation rider later. It's the only one in the marketplace that allows you to have control of your inflation option. The only option is 5%, though. Must be exercised at least every 3 years. You cannot skip the third option. We'll get into a little graph in a little bit. We offer, of course, the automatic benefit increases 1, 2, 3, and 5%, and it's compound based. And then we also offer a 10-pay as well. So we have the 10-pay plan and a life pay plan. A 10-pay is really, really gotten at younger ages because we're focusing on younger clients these days and having the conversations so much younger. These 10-pays start getting attractive to these people. So because, younger you are, the healthier, the better rate, the better premium, and then they're done in 10 years. So it kind of works nice all together.
Is there a rate guarantee that applies to the 10 pay, Anita, at all?
Absolutely,
That five
except for
years?
Florida. Yep. So great question. I always forget to bring it up. If we have many clients that say, well, if I never use it, or what about our, the rate increases in the future? Well, our background for that is a whole separate deal, but we haven't had rate increases since 2004, and it was just on a certain block of business. So it's been well over 20 years. Super steady, just wonderful. And again, we're still selling that 2016 version of Thrivent. So, yeah, the 10-pay does have the 5-year rate guarantee. So let's talk about the benefits and features that are built into the Thrivent policy are much like mutuals and NGL, if you're familiar with them. Our waiver of premium is a little unique. I love this. The waiver of premium obviously is built in on individual cases as well as our shared care. We have a shared care rider that allows them to share each other's pool of money. It also has the built-in waiver of premium. It is not an additional rider. It's built in because they've chosen the shared care rider. So when one goes on claim, both premiums are waived. So I do like that as a highlight with Thrivent because I think some of our competitors may have it as a rider. Um, our care coordination services are absolutely fabulous. That would be another great call to have about our home health care services and claims and care coordinators, which is the same as the professional care that is built into the policy. Um, and then bed reservation up to 60 days. We'll reserve the bed up to 60 days if the client needs to leave the facility. Alternative care, of course, that we thrive in 30 years from now. I mean, I get this question more often than I ever believed, but I'll have a lot of advisors say, well, you go by these policy series today, what happens in 30 years? And I can almost live at that, how much the, how much the technology and services in our health world have changed so much that might not be listed in my policy, which it probably isn't. And so Thrivent has that alternative care that we will accept and identify what's available and still qualify for that claim in 30 years. So they're flexible on that is what I'm saying. And then of course our contingent non-forfeiture is the benefit in an event that we have a substantial premium rate increase. That's a rider. So built-in features and benefits, we have the respite care, home and equipment modification, which is worth 2 times of the monthly benefit. We'll pay up to 2 times of the monthly benefit for home equipment, help ramps, etc., to make that home or the place that they're residing safe place, right? Caregiving training, we will train an informal caregiver, but they would not be reimbursed unless they add the cash benefit rider that Thrivent has. We'll talk about that in a few minutes. And then our international coverage, again, just remember, you guys, it's very minimal. It's 2 months monthly benefit. So it's 2 months total. Monthly benefit, 6,000 a month benefit times 2 would be 12,000 one time of the life of the contract if for international coverage. It's minimal, we know it, but we want them to come back to the States for care. Our building blocks again is our 30, 90, and 180-day elimination periods. The 1 day of service equals 7 days towards credit to your elimination period. Our minimum monthly benefits, 1,500 to 15,000. And then it looks funny, we go by months or we go by the multiplier, which is the benefit period, is 2, 3, 4, 5, and 8. There's no 6 or 7. And then that's just based on the total pool. So we have discounts and riders. I'm going to go right into this. We have a preferred discount. We have 3 ratings with Thrivent. It's preferred, standard, and a class 1. And if you're a preferred, it's a 10% difference between a standard and a preferred rating. And then we have couple discounts. When a husband and wife apply together, it's a 20% discount. Or this has happened more than often, lot. If we have a client that has a spouse that had maybe bought an annuity or bought something at Thrivent years ago, and there's generational, or they're married, or they can get a 20% discount. So that spouse that doesn't have a policy, just because that other spouse has one here, will get a 20% discount. Or they both would have to apply for 20%. And then our 5% discount is if one is applying, but the other insured, the spouse, the partner, already has a policy or is uninsurable risk. They would still get a 5% because they were married or they've been living together for at least 3 years. Again, the married discounts is pretty flexible with Thrivent. civil union, domestic partners, the same sex, sharing the same household expenses for at least 3 consecutive years qualifies for the spousal discounts, shared care. And then we had a really unique case, and I always bring this up because it was a new one to me. But we had two sisters, generational sisters, that lived together with their parents out of California. 54 and 57-year-old females were treated just like married couples. Same generation. So that was kind of fun. Um, Shared care, 20% discount. So they're pretty flexible on that.
Hey,
Um,
Anita, quick question that
yeah,
came in,
oh,
and I
yeah.
was actually wondering about this as well for the 20%
Hmm.
partner discount. If one of those individuals has a non-long-term care product through Thrivent AAL or LB, that would qualify for the discount as well if the other is applying for Thrivent LTC.
Yes, it
Awesome.
has to be a product within Thrivent. Thrivent is, it's a financial institution. It's
Right.
advisory, cure driven. So we have annuities, life insurance, term insurance, DI, long-term care. That's the health side.
Gotcha.
Yep, yep. So it could be any policy. It
Okay.
doesn't have to be another long-term care policy.
Awesome. Appreciate that.
Okay, yeah, right. All right, so we talked about the inflation option. We have the 1, 2, 3, and 5% compound annually inflation available. Um, you guys are pretty savvy in a lot of this stuff. I'm going to bounce right over to the FIB rider. All right, here we go. So I use this graph because for me to explain it, it's more confusing. So I use my graph. And I want to make it really simple. This is a future increased benefit option, and it is super attractive. Where it fits is younger ages, business owners, um, you name it. So I'm going to explain how it works. So the client purchases a policy at age 50, and I'm going to use the graph. What the expectations are of this is every anniversary date, they will get, they will automatically have the 5% compound inflation on their policy, right? So it will automatically be added to their policy unless they decline it. Because remember, the 5% FIB, the client has control of when they want to exercise that option. What I mean by that is they can take 1 year and skip 2, but they cannot skip 3 in a row. Okay. This example shows this client being 50, they take it for 6 years, they skip 1, take 2, they take 1, skip 2. You just can't skip 3 because if you skip the third one, it won't be offered again. And so on. And as that grows, of course, at 5%, it's going to grow pretty nicely. If the younger you are, the more you accept, right? The less premium you're going to pay every time you exercise that. It's based on the age and premium. There's no certain amount of what that's going to cost the client. However, we can illustrate that in our software so they can literally see the illustration
So for
of
each
the.
illustration, that's actually priced out for the client to be able to
Yep.
see.
And you can literally price it out, literally in our software, price it out, showing it every year, every other year, or every third year. Because the client might just say, I'm going to do it every third year. I love
Yeah.
that idea. I have 2 years break, whatever. So it's very flexible that way. So then let's say at age 75, they say, I'm done. I got, $400 a day, whatever. And they stop. The unique part of this, you guys, this is cool. Once they go on claim, in this example at age 80, they go on claim. The 5% compound kicks in again, and they're on waiver of premium. because once you go on claim, we waive the premiums. So this 5% kicks in again. Here's the kicker. You could only maybe take 3 or 4 or 5 years of it and then be done. That still happens, right? So I could be 50, take it to 60 and go on claim at 70. For 10 years, I didn't take it. It kicks in again. Yep.
Really attractive.
It is. And it gives the client's got to know this though and really understand how it works because it automatically is going to happen. How it works is 2 months every year prior to their anniversary date, they get a letter from Thrivent. It says, hey, we're almost, you're at your time. This is what your new premium's going to be. And this is what your new monthly, benefit's going to be. And so they give them all that information. But there's also a document that says, if you choose to opt out, sign here and mail it in or fax it to us. So that increase won't happen that year.
Gotcha.
So
Otherwise, it's assumed that they will be taking
yep.
that 5% increase. There's no way to kind of custom set that to a
Mm-mm.
schedule. Okay. Okay. That's
Mm-mm.
helpful to know.
No. So there's that really gray area where it makes a lot of our advisors a little uncomfortable about it, or maybe unsure about trying to sell this to their client and have them understand that piece. We see a lot of action on younger people. They seem to be a little more savvy. I'm not stereotypic, but you know what I'm saying. So it's attractive to them. They're a little like daredevils or something. and
Yeah,
and
and
they
I think
want
for
to do
something like
that.
5% compound at younger ages, that
Yes,
premium can certainly add up over time. So something like this to be able to turn on and turn off makes sense.
exactly. So I hope you guys don't have too many questions on that. But you can always call me, you guys, and if you want illustrations or you need help illustrating it, showing it, I'm here to help you guys with that. This is probably one of my favorite riders, you guys, just because of the indemnity pieces, the indemnity that's out in the marketplace today. Our nationwide, Securian, whatever, have these indemnity policies. And then, of course, we have Mutual of Omaha with their built-in 25% cash benefit for home health care. Thrivent has this rider. It's called the Cash Benefit Rider. It is an additional cost to it. What it is, it will pay 15% of whatever your monthly benefit is in cash. Here's the kicker. It has its own pool. It's separate from the reimbursement. So you have the reimbursement. We all know what that's going to be, billable expense at the end of every month. But if you have this cash benefit rider, once your claim's approved, you only need to have 5 days of service in 30-day period to get your cash benefit. Okay. You can only elect to maybe get your cash benefit and not have a licensed care provider or get all that reimbursement. But normally, I think when somebody triggers the 2 of the 680, I'll really probably need that reimbursement side as well. Because, 15% or 10% for facility cash only isn't a whole lot of money, but that money will help pay for the costs that are not covered, right, under the LTC policy. So it's really nice to have that additional cash. So again, it's a separate pool. It runs as long as the reimbursement pool does. So we have that pool of money. It runs as long as it lasts on the reimbursement. And when the reimbursement, so we've exhausted our pool, so does the cash.
Is that subject to inflation protection as well, or given that it's a separate pool, is it not?
Awesome. It's based on when you go on claim what your monthly benefit is. It has nothing
Cool.
to do with original monthly benefit.
Love
It's
that.
based on whatever your 15% of whatever your monthly benefit is at claim.
Love that.
I know it's not sold enough, but we're gaining traction because all I want to do is talk about it. So It takes a lot of work to just talk about it. So we're gonna go right to here. The non-forfeiture, you guys, as a rider. It's probably the least rider I ever see ever sold for the premium. Um, and then the return of premium upon death. Um, it's so expensive. I'm going to tell you guys, take your LTC people, if they want return of premium, if they're concerned about losing their premiums, we better shift them over to the asset care real quick. Because that will just be the best. But those are the two riders that are least probably sold, but they're totally available and it works for some people. I've had people on claims that had John Hancock policies, and it was amazing. I mean, they called on claim, the claimant, her husband would passed away, and it was so enlightening to be able to say that your policy is paid in full. I mean, so it's cool. Oh no, that was the survivorship. Sorry. Let's back up 1 second here. The return of premium is based on the policy has to be enforced for at least 10 years, and then if somebody passes away, all premiums paid go to the estate. We don't have beneficiaries. All right. Wanted to clarify that. Our shared care, we just talked about it earlier. Two people apply, they have the shared care rider. There's a couple of things that go on with our shared care. Two people apply, one goes on claim, both premiums will be waived. If Mr. goes on claim and uses, he has a $300,000 total pool of LTC, he only uses 100. That balance transfers to the surviving spouse's pool, and she starts making her premiums again. So anything left in the death of the spouse transferred to the survivor. Okay. And then if Mr. exhausts both pools, now Mrs. has nothing left in her pool. If this happens before her age 85, Thrivent says, we will honor at attained age rates at your attained age before age 85, the original monthly benefit for a benefit period of 24 months. And then, of course, our flexible increased benefit rider is not available on our 10-pay. Our waiver of premium for home health care is, other than the inflation, is probably the most sold, is what I see and quote. Waive that 90 days for home health care. You got your care coordinators. Our care coordinating is phenomenal. It's a whole separate unit at Thrivent. That's a whole different conversation, but it's our home health care waiver of elimination period is fabulous. And then, of course, we have our 10-pay 5-year break built guarantee. But the 10-pay not available with the flexible increase or the survivorship rider. But we can do it shared care. And there's no age limit for a 10-pay either. And then really, I think I just can kind of end on this. I'm going to just kind of get into our claims. I don't want to run out of time. I want Q&A if possible. But I would like to show you our claims. This is fairly new. New data, absolutely, 2026, right? So it's amazing. The number of LTC claims and lives are pending are 6,917. The average monthly claim, our monthly average LTC claim payments is 27,156,000. This was a shocker for me. Top 3 causes and claims in this order. This is based on Thrivent's data. But mental, nervous, neurological, and circulatory. Yep. And our females and males, I've seen a huge jump on the longevity, guys. I used to solve for like age 80. what should my benefit look like at age 80? I'm sort of building that a little later in life. But age 85 is our averages, 85. And then, of course, I see the men, that's jumped up a little bit as well. The average length of claim. Yep.
Circulatory stands out to me, honestly, as the top three.
Yeah. Well, all three. I mean, I just thought was more going to be like memory and even skeletal and stuff like, I mean, I don't know. It
Sure.
didn't, mental nervous was, that shocked me. You
Yeah.
know, I mean, for it to be. So anyway, that's kind of our averages on our claims. And that's really about it for today. There's claim numbers. We have a whole bunch of information on the eligibility. This is a good one, you guys. Benefits that trigger LTC contracts, chronic illness, physical impairment, and cognitive impairment. Those are the triggering causes, right? And then this is very true. Top reasons claims are denied. And I see it so often. It's because they either didn't meet the elimination period, the lack of information from three different resources, and it comes from the client, the medical doctor, and the packet that the client is supposed to fill out on top of that. So all that's gathered, reviewed, and then that's how we process the claim. So it's usually lack of getting all that information in as well. Um, I think that's it, you guys. What kind of questions do you have? Or did I lose everybody halfway through this? I
No,
might
I
have
think
dropped.
we got any questions that came into me. I made sure to ask. I had a number that were just on my own too. I want to give a shout out to your guys's quoting engine. I think it's a really sleek quoting
Hmm.
software to be able to get in and quote your plan. I would say very easy and flexible to use. So I just want to give kudos to Thrivent there.
Wonderful. Yeah, we're working. We're slow on stuff. We're Thrivent is, we all know, very conservative, but we're working on bettering our EAP a little bit more. It's driven by iPipeline. We've had a lot of snags and people, our advisors meeting clients and have the spinning problem, or when the EAP gets, emailed to the client's having trouble on their end. I mean, it's just a wide range of things. But cross my fingers, I would say the last 6 months, I've probably gotten just a few calls on ITI pipeline. So I'm really happy about that. Real quick, our underwriting has gotten a lot better in the last like 5 years, much more competitive, a little bit more lenient is what I say.
Yeah, I would ask
Um,
which conditions is that relative to that you might have gotten a little better on?
diabetes, diabetes, you guys, all day long, we take insulin.
Up to how many
Control
units?
could up to 100, I believe, 70 or 100.
Oh wow, that's nice.
But we take insulin, but you always remember, just because we take insulin, we've got to be stable, right?
Still an uphill battle.
Our
Yep.
A1C reading is below 8.0, but I get nervous even saying that. I like to stick by 7.5
Sure.
when when I do field work. So, but I think they'll go up to 8.0. So we're really good with diabetes. Um, we're excellent with heart cancer, stents, cancer, as long as everything is controlled. We're a little tougher in postponements. What I mean by that is pending hip surgery, or not pending, but completed, but we have a postpone, right? 3 months is normally common because it takes that long to get out of doctor's care, right? So anything pending in medical records and memory, um, anything pending as far as knee surgeries, hips, that's obviously a postpone, right? Until that's been done. But I just see anything noted in memory, not a chance.
Sure.
We all know that, but those are just kind of things I just want to reiterate.
Diane is asking about hardware. Diane, could you just elaborate on that just a little bit for Anita? Are
Oh,
you
well,
talking?
yeah. So you fractured your ankle when you were 30 and you have pins and plates in your ankle, but you're fine otherwise.
Oh, the pins and stuff are fine because we take people who full knee replacements with balls and the whole joint replacement. So pins, that's fine. Just no canes, no use of anything, full mobile working, no physical therapy, out of doctor's care completely. Hopefully not any kind of pain meds or something that involved that. But like you said, 30 years ago, my goodness. Yeah, I think that'd be fine, Diane. It'd be a standard for sure.
Hmm. All right. Well,
Hmm.
thank you.
Nice to see you on the call, by the way.
You too.
Yes.
We have somebody else asking about life with long-term care rider, just to set the record straight. Care Forward is not being offered anymore. Is that correct?
That's correct. June of 2024, we took it off the market. We only had it on the market for 4 years. And I'll tell you, I was on the board of developing that product. We pulled a lot of that information with One America because that happened back then to be one of my favorite, I guess, combo products, right? And we
Hmm.
wrote, and they just had so much to offer. So we pulled some of that from there and we built it. And two negatives about the Care Forward product. And of course, we're on the front line. Why aren't we selling it? And it's just like, you guys, the Care Forward product, there isn't a feature right now in it that is competitive with our friends, One America, Lincoln, all of them, right? And then the negative part was that the money going into the death benefits were way too small. So you'd put a bunch of money into it. I mean, it was flexible with, the 10 pay, the 20 pay, whatever, and single pay. We did well with 1035 exchanges, but the death benefit, it just, you couldn't line them up with the other competitors. It was so much lower, but the premium was the same. It just didn't make sense in the market.
Sure.
And
Well, we appreciate the transparency and just the dedication to
yes,
long-term care to make the effort to get in there.
right. Well, and I mean, we go around and around because I mean, I would love to be able to build a product that is competitive and have Thrivent's traditional hybrid and together. And that was fun when we were doing it, but it wasn't competitive enough
Sure.
because we always, did side by sides. And it was not, and then the underwriting. We couldn't get anything through the underwriting.
Sure.
And I think it's because they had a hard time underwriting it with the life component and they had a hard time mixing those two together.
Sure.
And the pricing we weren't ready for it, obviously. But
Makes
that's
sense.
okay. We kind of snuck back out and was like, okay, that just didn't happen, kind of thing. We tried, but
Appreciate the
I'm hoping some.
transparency there.
Yeah, perfect.
Anybody else have any questions for Anita before we start to wrap it up? Feel free to drop anything in the chat. Anita, any
Hmm.
takeaways you'd like to give the audience before we wrap on today?
Takeaways. Um, Give me a call. Number one, it's not really a takeaway. I'm just telling you, I'm a really good support person here at Thrivent. I do a little bit of everything. And so when you think of Thrivent, from quoting, the tools out in the market, we use WinFlex as well. So the two quoting tools are the Thrivent e-app. Once you're appointed, you would log in and we have the links. You log in and create your own account on iPipeline to separate us from our competitors. And then we also do our quoting on iPipeline as well, like what we do with One America or whatever. You can save your quotes out there. And then the e-app. So that's a one-stop shop. We do not have a particular agent website yet. It's going to be coming. A one-stop shop is what I mean, where we can get marketing material and all that fun stuff. We don't have that yet. So you can get a hold of me. I can order hard copies of things for you if that's what you choose. or do them via email. Yep. And that's it.
Awesome. Well, I definitely appreciate it. Feel free to send me any leave
Mhm.
behind materials and we can get that sent out with the recording. I think beyond that, we really appreciate it and look forward to having you on another call again in the future.
Yes.
Um, and, I think running with this same product since 2016 means something must be working and working well. So obviously continue to hope for no news is good news with the product unless there's some nice improvements, but really appreciate you taking the time
Okay.
to speak with everybody today.
Wonderful. Well, thank you guys so much for taking your afternoon and listening to Thrivent. All right. So you guys have a good rest of the week and drop my number down. 612-454-4412. That's my direct dial. And I'm Central Standard Time, by the way. I got some Californians
That's
out there,
good
you
to
guys.
know. Yeah.
Your 3 o'clock is my 5 o'clock. So anyway, all right, well, perfect.
Thank you,
Oh,
Anita.
that's speaking of California, you guys, California and Florida are the hottest rates thriving states ever.
Oh,
If you have cases in California and Thrivent, line them up. We're $1,500 difference in many cases. Okay.
awesome. Thank you, Anita, so
All
much.
righty. See you
Thanks,
later.
everybody. Have a great day.
Okay. Bye-bye.
Bye.